Hey there, welcome. It's Les Solgrove. This is Simply Des Moines Market Values. Week 11 for 2023. We're officially into spring. This is a Monday show. I was traveling over the weekend, so we're bringing you this show for this week on a Monday night, which gives me the ability to say, hey, welcome to the first day of spring. It's been a great day out there today, and I think we got a few more of those coming down the road as opposed to what we've been experiencing the last 10 or 11 weeks of the year. So Simply Des Moines Market Values. This is the show that talks about Des Moines real estate market activity, sales, pointing out all the things that are kind of happening in the Des Moines and Central Iowa real estate market on a weekly basis. It's a YouTube show, so please do me the favor of giving me a thumbs up on the video. That helps it be found. Also hit the like button, thumbs up, and be sure and subscribe to the channel as well. That helps out a lot as well. So anyway, let's get started. This is the weekly hot sheet for March 19th. This was actually from yesterday. This is the only graphics that's from yesterday. Everything else is as of Monday here. But one thing you'll notice down there in the right-hand corner, we're starting to inch up closer to 2,000 closed year-to-date sales. And we'll talk about that at the very end of the show today about the pace that we're on for that. It's starting to pick up pretty well. So let's jump right in here. So normally on the show, I talk about kind of all homes for sale. I don't specify back to just, for example, existing homes. I don't focus just on that on a weekly basis. But this week's going to be a little bit different. We're going to talk about existing home sales. This is a category that has only about 31% of our home inventory is existing homes on the market. About 58% of the homes in sale pending are made up of the existing home category. And of the closed sales, we make up about 70% of our year-to-date closed sales. So it's a small number of homes that are currently on the market, but a large percentage that are closed year-to-date. And so I thought, well, I'd focus on that as we start our first day of spring here in 2023. This graphic is a view of homes for sale year over year. The dark blue, obviously, and this is going to be the same case as we go through these today. The dark blue area graphic in the background there is 2023 year to date, and the dark black line is 2022, and the light gray line behind that is 2021. It was suggested 3 or 4 weeks ago that I bring in the last 2 years to see what kind of pace we're on. Basically since the first of COVID there when we hit in the year 2020, 2021. And so I went back just 2 years, back to 2021, just to kind of give us some idea. And you can see that our inventory levels in the existing home sale range is above last year and the year before. We're at about 780 homes for sale currently. And that's been the most we've seen for sale as we started a new year. At this pace, you can see we started out the very first of the year just at a little over 1,000 homes for sale. But this is a nice number to start the year off with, and I think that's going to help us achieve some pretty good sales activity this year, as long as we don't have any outliers come into play. Like that R word recession. If it kind of holds off, I think this year's going to be pretty good. When you look at the median list price, I think this was kind of interesting. We're going to look at median list price, the price at sale pending, and then the closed sale price for existing homes. And right now you can see that the median list price is kind of on track, really. I mean, we're a little bit above, but pretty close on track to 2021 for 2 years ago. Still up quite a bit over 2022. Really basically the last half of last year, we saw our median list prices of existing homes really rise. And I think that was, just kind of an interesting concept that, when we're seeing existing home prices rise, it's common to see that in new construction. But as we went into the end of the year last year, our existing home prices maintained a pretty high price point, which could very well just be due to the fact that we don't have as many of the low end pricing properties on the market, and therefore it's just pushing the median pricing up. We are desperately short in that under $200,000 price point, which that's so if we're seeing some more homes come on the market a little bit higher Maybe some sellers out there are trying to cash in on the last bit of the the COVID years, as it were, of market price rising. So anyway, let's take a peek at the price at sell pending. Now, keep in mind, the pending price is the price of the property at the time it went under contract. It does not indicate what the actual sale price was. This is just the price at the time the home went under contract. And starting off the year, we were pretty steady. I mean, we were just under that 250 mark for about the first 45 days of the year. The last half of February and into March now, those last 30 days, we've really seen that stay pretty close to about that, right at that $250,000 price point, with really the last couple of weeks starting to just see a spike. And year over year, you'll notice that, we do see that our median price at pending tends to go up as the spring market comes on. And so maybe this is just a sign that we're seeing that kind of begin here with the kind of in that third week of March. We finally broke above the $250,000 median price at pending. We'll expect to see this go up throughout the summer months and then back down if we maintain the same pace that we saw from 2022 to 2021. But really, the story here I want to really focus on is the median sale price, because if list prices are higher and pending prices are higher, that means that the pending price should be quite a bit higher. And actually, it's not as high as it probably could be if we were maintaining that same ratio of list price over the previous couple of years. True, this last probably 30 days or so, we've seen the median sale price. I wouldn't say it really has risen. It's gone up just a little bit, but it's maintained a higher rate year over year than the last 2 years. And again, as we move into the months of May, June, and July is when we see those higher priced sale prices come into play. So does this mean we're going to see even higher priced properties as we get into the summertime? I don't know. I think that we're still with the mortgage interest rates kind of floating around that 6.25% to 6.5%. I think that's going to kind of help keep some of that pricing down just a little bit. So be interesting to watch this. But again, there's the median list price over year and year over 2 years ago, median pending price for the last year versus the previous year, and then again here the median sale price. So it's consistently above the last 2 years, but not dramatically over to the point where I think I would say we're going to see a prices really spiking high. Months of inventory, we are almost double in this particular category from last year. Last year we were right at about 15 days or half of a month of inventory. Right now we're sitting and have sat pretty close to that, just a little over a month of inventory since the 1st of February. And if we maintain this through the rest of the spring market into the early summer market, we could see this number stay around that 1 month of inventory and then start to rise as we get into the fall. What this means for home buyers is that buyers are having a little bit more time to look at homes without having to make a decision on the spot this year, which is probably a good thing for home buyers. It's a little frustrating for home sellers who are used to seeing the market sell at a little bit faster pace. When there's not as much inventory, stuff does tend to sell quickly. We're still seeing some fast sales, especially when you get underneath that $250,000 price point. We're seeing a few bidding wars, but not as many as we really saw in the height of the COVID years. So I think it's just it's a nice slower pace in that respect. It helps out the buyers a little bit and maybe gives sellers a little confidence that homeowners anyway, that if they were to put their homes on the market, they might have a little bit better chance of finding something without having to make a decision based on fear of not knowing where they're going to go. So I think that's the positive part of this market slowing just a little bit here. There's that days on market. This before here was months of inventory. Days on market, again, is kind of a similar story to the months of inventory, how long we have, how much inventory we have, and this is how long it's taking to sell. We really have had a pretty good spike in that days on market. again, more than double the days on market since the first of the year. It was almost hitting 30 days on market for existing homes in the month of February. But that has dropped back down under about 18, 19 days right now, and I suspect that that'll go back down to about 14 days, maybe moving forward again as we move into the summertime. So days on market and months of inventory, when those numbers are up, that just means the market's a little bit slower. Buyers are still having a little time to look, and sellers are, again, realizing that we're no longer in the crazy 2020, 2021 real estate market where stuff was selling in minutes. So last couple slides of the show this week, another indication that our pace is picking up. As of today, March 20th, we have 1,893 homes under contract. This is our days to hit the next 1,000 milestone. So we hit 1,000 homes for sale about 27 days ago. And we are on track to, if we can hit 2,000 closed sales, that next 1,000 sale milestone from 1,000 to 2,000 within the next week, then we will be ahead of pace compared to last year. Last year, it took us 39 days to hit that second 1,000 closed sales. This year, it looks like we might be able to do that in just a few less. It's still going to take about 30 to 32 or 33 days from my estimation, but we're only 107 sales away. And in fact, today's sales turned in from last weekend or last week's closings was a pretty good jump. So I'm hoping that there's a nice jump like that as well. It'd be great if we could get our next 1,000 milestone done within 30 days. That would be a pretty good accomplishment. Once we get past this 2,000 closed sales, the pace that we end up moving forward for every 1,000 sales really is somewhere around that 14 to 21 days throughout the rest of the year, up until we hit around 12 or 13,000 sales. So, the next, say the next 10,000 sales are going to come at a pace of about 14 to 21 days on average, if everything goes compared to last year. And that would put us year-to-date closing somewhere around that 14 to 15, maybe 16,000 closed sales at that pace. It's got to pick up quite a bit, I would say, to beat last year, but if things change, it can all change fairly quickly. Last slide of the show here today is the year-to-date close by category, and this is where I'm jumping back into looking at all homes. This represents that 1,893 year-to-date closed sales in the far left bar column. This shows you where the breakdown between existing homes, which are blue, existing condo, which is the orange, the green is new construction single-family homes, and new condo townhome sales are in the golden or yellow there. Of that 1,893, 1,318 so far year to date are existing home sales. 232 are existing condo townhomes. We're still, second place is still coming in the new construction single family homes. So the single family homes are still selling both new and resale at a little bit faster pace than the condo market. And we have yet to hit 100 closed sales in the new construction condo townhomes. Now, again, some of those are we're probably going to hit that. I think we had like 200 and some sales last year in the condo townhomes. So it's just, even if we hit 78, it's just a much slower paced segment of the market. We just don't sell as many of those. But in any case, this is the breakdown. It's always interesting to kind of look at the market from different segments. I'm working on some graphics for next week's show, which it may not be next week, but I'm hoping I'll have it ready for next week, which is we're going to talk about automated valuation models, AVMs again, and get some idea of what the pace is for that typical Des Moines two-story, which is about 1,800 square feet that I've been tracking now for the last 5 or 6 years, and we'll show you kind of how that looks. So anyway, thanks for joining me on the show this week. Sorry it was a Monday. I was traveling over the weekend. Just wanted to make sure I didn't rush something last night, to get this show out. So this is a rare Monday. Welcome to the first day of spring, and be safe out there. Enjoy the warm weather while we have it. We're going to have a little rain probably, but we'll talk to you all again next Sunday, and have a great week. Talk to you soon.